Hey Worthies, welcome to Worthy Women Wednesdays, and today's topic is ETF. ETF stands for Exchange Traded Fund. So here's a rule of thumb that I want you guys to remember. Anytime you hear the word fund, F-U-N-D, it means more than one. For instance, if you hear mutual fund, bond fund, index fund, exchange traded fund, it means that you are investing in a collection of assets. It's a collection of stocks or a collection of bonds. Now, ETFs are usually based off a particular investment strategy. You have ETFs that will focus on growth stocks. You have ETFs that will focus on value stocks. You also have ETFs that are focused on the S&P 500, or you can have ETFs that focus on providing dividend income, right? So today I want to give you a visual depiction of what it's like to invest in an ETF and the importance of investing in ETFs. So here I have an empty bowl, and this empty bowl represents an ETF that I want to build, right? When you invest in an ETF, this is already built for you. A fund manager is going to basically select the stocks that he or she wants to invest in based on the particular investing strategy that they've identified for that fund. These small bowls represent stocks or companies that are publicly traded on one of the open markets, right? So essentially what a fund manager is going to do to make the ETF or create the ETF is pick stock from companies, right, that are based on the investment strategy that they've chosen for that particular fund. So say I'm looking for an ETF that will provide dividend income. I'm going to select an ETF that's going to provide that dividend income I'm looking for, and the fund manager has already created an ETF that provides the dividend income. So instead of you going to pick individual stocks that provide dividend income, you can invest in one ETF that is already invested in a number of different stocks that are going to provide dividend income for you. So why are ETFs great? Remember, I said they provide diversification, and diversification is important when it comes to minimizing your risk, right? So let's say that this particular stock, which is our raspberries, right? What if raspberries aren't doing good that day or month or year? Well, an ETF is a collection of stocks, right? Or a collection of bonds. So if the raspberries aren't doing that great, you have your grapes, your blackberries, and your blueberries, right? That will help minimize the losses associated with the raspberries. This is why I like ETFs, because you're already diversified, right? You're sending your money into one ETF, and that ETF is comprised of a collection of stocks or a collection of bonds, which is going to help you diversify your portfolio. And diversification is really important. So until next time, please stay worthy and remember to manage your worth, and the wealth will follow. Take care.